So quite a busy week, and maybe you could say not quite as busy as last week. Obviously, we had the 3 central bank meetings last week. We had a lot of developments on trade. That's causing a bit of a kind of worrisome tone today. Obviously, the tit-for-tat trade war in effect between the US and China causing a bit of concern. And this week, big one for the oil price, which is bouncing a little bit today on some rumours that have come around about how much OPEC are going to increase production. That OPEC meeting, it starts on Thursday, but the kind of final decision should be Friday, although sometimes it can come out before. But there's a bit of news out today that they're only going to increase production moderately, so a bit of a compromise, and maybe slightly less than people had suspected. So obviously, less supply coming into the market than expected. That's it's good for the price. So that's what we're seeing today. I mean, OPEC's a big one. But if you do want a bit more of a kind of general feeling as to the kind of fundamental drivers that could be interesting for the week, please check out our week ahead report. Today we're going to be focusing mainly on the price charts. So I'm assuming everyone's probably read the risk warning at this stage. Let me skip right through to the trading platform. So we'll start with the currency market. So as you can see, some fairly dramatic moves last week in the euro. So it was basically in line with what we were saying. I think in the last week's webinar, what we were debating when we were sitting around here at this sort of 118 level, up at these old highs, it was basically a question as to whether this was the top or whether there was a room for a bit of a bounce higher. As it turned out, pretty much that old support held as resistance. We tried to bump through there for most of the week, and then obviously with that dramatic decline on the ECB day. So the way I would categorize this is that it's still a seller's market. Both the moving averages are in line for a downtrend, and we're below that 200-day moving average. But that said, 115 could be a double bottom. So we've still got a potential for that, because this was a decent rebound after a big drop. So there's a chance that we come back down, test these 115 lows, and rebound again. But that's a chance you always have to deal with in a downtrend. Of course, the lows could hold and the trend could reverse, but the idea of following the trend is that it's going to continue. So if you drop down to the 4-hour chart, you see a bit more evidence of this downtrend in place, where we were in this rebound where obviously we took out the high, and then failed to take out the high on these few occasions down here. Maybe anyone who's trading in line with sort of a little triangle break here got a little bit caught out. Again, it's just one of those examples where, if you were trading the breakout of this little potential kind of triangle or wedge top, you're just going against the longer term trend. And so, that longer term trend, that big resistance that we highlighted on the daily chart worked out, obviously. And if after this 4-hour, 1-hour candle, it's pretty clear that things were rolling over, and then for the next few hours we come back and we've somewhat tested near the lows again. Basically 115.50 has held as a round number, versus the 115 mark, which we'd never quite got to. It's 15.09 was the previous low. So at the moment we're eyeing up that high from whenever that was, Friday presumably. So there's a chance we break that to the top side, but I would imagine somewhere up in the region of this decline we roll over again to test the lows, if not the current high here. Pretty hard to, this is one of those occasions where you feel like the market probably is going to continue heading lower, but at the moment, how do you manage your risk? Do you put your stop loss right up here? If you're selling down here and your stop loss up here, obviously it's a huge risk you're taking on for what is potentially minimal reward, right down to just to this low here, which is the major support. So just from a pure risk to reward standpoint, you really ideally want to be trading up back close to this former resistance turned support, turned potentially resistance again, maybe up close to 117, would probably be the only area that'd be worthwhile getting in again with that stop loss up above those highs. That said, if we roll over from here, or if we do form a slightly higher high but then roll over through the lows again, kind of take out this little short-term uptrend environment, then obviously you can use that next high as maybe a point to use for your stop loss. So that would then enable you to get into the market lower, but you need a bit more confirmation first, in my eyes. But certainly watch out for this level where we currently sit. This might be as far as we get, because this is pretty negative. So this, I doubt, is much buying going on here. This is more sort of people who were short capitulating, not capitulating, but taking profits in essence, in case we do get a bigger move and some of those profits get unwound. Or obviously people who are long prior to this move and just trying to get back as much as they can, minimize the losses. So yeah, to recap, it's to me a pretty downtrending bearish environment. 115 could be the low, but at the moment we don't have any particular evidence to suggest it would be, and it looks like lower prices. Moving swiftly on to the pound. So I had mentioned this region last week. I actually put a note out on TradingView that these previous lows up to 135, this kind of zone here, based on these old lows, I think is what I used, and 135, the round number, somewhere in that zone would be a potential sell point. It did turn out to be, so now just using that old high as the kind of immediate focus in terms of a resistance. And the market has basically rolled over and touched the support down at 132, or just above 132. So similar question mark, is this the beginnings of a double bottom pattern? Well, it potentially is, of course, but so selling at the low, never particularly great idea, but there we are in a downtrending environment. So dropping down to the 4-hour chart, we're just going to look out for this high here. We had a kind of decent rebound off the old support, or just before it, coming down a bit to test somewhere in that zone now. If we can push up again and up through the resistance, then at least you've got signs of more like this kind of environment that we were in before, where you're taking out the resistances, holding the supports. Obviously at the moment we're taking out the supports and we're holding the resistance, resistance way up there. We only managed to get this far before we rolled over. So at the moment, pretty soft on a 4-hourly basis, but difficult to sell down here because we're basically right at the support. So you want to look for a break of that longer term support level to show the market's ready for its next leg lower through that support, or you want to kind of rebound further up here to minimize your risk to sell higher up in anticipation of another retest of the lows, or holding on for that big move lower. Unsurprisingly, a bit of a mirror image in the dollar-yen chart. You can see these are the kind of big levels we're contending with. We had a false break, which we mentioned before. We did say in last week's webinar that it was a bit of a bullish bias to things, because again, we are just taking out the highs, holding the supports, and the moving averages were all in alignment for an uptrend. And so we're making steady progress through there. We basically need to get, we were above 110, but we really need to get through that old high at 111.40, because it's more of a sort of range-bound environment at the moment, just supported by this slightly longer term daily trend. So bias to the upside, but still, while we're capped by 111, it's not really a trend necessarily. Hence it's a bit choppy. So you can see not a really powerful trend, because we take out the resistance here, then we drop way through it and come even a little bit through that support. Again here, take out the resistance, but we don't hold the resistance as support, we drop down to the moving averages. And a similar thing here, took out this resistance, but it's been a bit choppy, and we're probably going to drop again a bit before we push higher. So it's a choppy uptrend, and I suspect it would accelerate and be a bit more reliable should we get through that 111.40. At the moment it's a bit range bound, and it wouldn't be surprised to see some sort of topping action happen around 111.40 and see what's currently a kind of uptrending scenario turn into a downtrending. We may be already even in the verge of that, because you can sort of see these highs haven't really been convincingly taken out, and then we put this little spike high that's not been taken out. So if we start taking out the lows, we have done so already here just on an intraday basis, but obviously if we drop down through here, or maybe this particular low here, if we meander for a round and we use this as the low, we drop down through here, that might be signs that this little period of uptrending is over. The daily bias, as I said, is higher, but you know, while we're in the range, you can't put too much emphasis on it. You basically want to be up above that old high and then trending up here on a shorter term basis to be more confident in the uptrend. So switching gears to indices, I hope everyone's following along all right now. Philip mentioned there were some video issues. I hope you can see everything now fine, Philip. No one else has complained, so maybe, oh, I think that was just at the start. Okay, perfect. Yeah, that was just at the start, before I'd even got going, I think. Okay, so this is the FTSE 100, obviously our proxy for it, the UK 100. Pretty awful day on Friday, so it was one of the biggest down days in European markets. Yeah, but I mean, obviously we've had a bit of a rebound in the pound, but really, as we saw on that previous chart against the dollar, it's pretty much at the lows, so you can't attribute this all to the pound. I think it's generally just these trade war concerns. We've got a lot of miners in the FTSE, so whenever there's something a bit negative towards China, which is the biggest consumer of these commodities that these companies mine, they tend to suffer and drag the index lower. So I think that was probably a big part of it. And just technically, you know, basically what had happened, I think I've talked about the same thing last week, where we had the initial break here, obviously gapped and went like massively low along with other global markets in February. We managed to rally up to a record high. We basically put in a little false break, which is fine, but we were supposed to be holding 7,600, which so far we have done, but we've really been consolidating and going nowhere fast for the last sort of 4 weeks, basically month, and now we're coming down and testing this 7,600 again. So if we break through 7,600, we also drop through the 50-day moving average. Both of those are bearish signs. We're not looking at just a break with a little retest and a push higher. We're in fact looking at a more sustained break to the downside, back into that old trading range. So watch out with 7,600. Close below there, I'll be a lot more negative on the UK 100. You can see for the time being, we obviously haven't closed the day, so you can't put any meaning onto it yet, but RSI seems to be implying we're dropping through the 50 threshold, which would be a negative for the trend. So that was, we've had some false breaks, so again, we basically need to close for the day below that 7,600 to put any weight, but at the moment it's looking a bit negative. Similar in the DAX or the Germany 30 as we trade it, just a reminder of the kind of daily position where we were trending high, had a big decline, pushed up back to the high, but have since rolled over pretty dramatically from those highs over the last couple of days. So signs are at the moment that this we're not quite breaking those highs to the top side in indices. In fact, we're rolling over from those old highs and potentially coming down to test the lows, which is down at 12,600 for the DAX. So yeah, some pretty sharp drops. You can see we had that big push to the top side, pulled back lower, had a little bounce, and then as soon as we closed down here, that's when we knew things were looking a bit more negative, and then obviously we just because this was such a big rally higher without much resistance, we've just dropped back through this whole bit of progress we made here. We're basically coming back to test the start of it again. You might have hoped for some sort of, this area of resistance to offer something. We paused there, and now we're down through it in this latest 4-hour candle. So indices looking fairly soft at the moment. And basically coming down to test the bottom of these ranges. So I wouldn't call it necessarily a downtrend. If you're short-term trading, I would just say that current momentum is to the downside, but there isn't any kind of overall trend. Only when we get through that 12,600, in my mind, could the trends really accelerate. 12,600 in the DAX matches up with maybe the 7,600 in the FTSE, and the FTSE just looking marginally weaker. The headlines out of the US are probably driving all of this, really. We're still just about edging out a kind of uptrend here. One thing I did look at just earlier today was that you can see it's the 61.8% fib is where we're rolling over from here of the February decline. Obviously, we've rebounded higher since, so but you can see these fib levels are kind of being respected. So this decline is what everyone's paying attention to. To me, this still looks okay. The market, the moving averages are sort of aligned, but obviously we're not. We're below these highs over here. So we've been in a kind of positive portion of what is overall a kind of sideways market since the February decline. Things have just been going sideways. For the Dow, that is obviously different looking feel to things if you're looking at the Nasdaq, but for the Dow, we're still in a kind of sideways market, and ultimately that's probably what will determine everything. So if I drop down to the 4-hour chart, you can see that we're currently in US futures looking at taking out last week's low. So you can see we were taking out resistances, holding supports for the early part of last week, and then we took out the support. Once we got to this stage, it was a warning sign, put in this low down here at the moving average, tried to rally up, held the other short-term moving average and closed back down again. It's around about here that things started to look pretty ominous. And then you had your next confirmation with this candle dropping through the low here, fell down, and then we've obviously, there's the low, and we've held it, and we're trying to drop through this low now as well. So yeah, looking pretty weak in indices. I'd say Wall Street actually does probably look the strongest of them all. It looks like we're dropping through the 20-day moving average, but maybe some support could be found down at the 50-day moving average, which I expect lines up with some sort of retracement of this last leg higher. So maybe somewhere, there's too many fibs on here. I mean, what we had highlighted here lines up with the 61.8, and it's also 24,700, so somewhat of a round number. Could be next level of support, and maybe where the market's able to pick up from again from this spot of weakness, because really we've made a new high. So as long as we don't make a lower low down through here, we're still kind of in business for the market rebounding and heading up through 25,000 again. So that's where we stand there. Moving on to metals, or commodities at least. Gold looking very soft right now. So I want to highlight the weekly chart here. So there's a couple of factors involved here. So we've got this rising trend line here. So we're just about to bounce off this rising trend line. There are various trend lines that you can draw, which is why I'm not putting too much emphasis on this. For example, you could draw this trend line, which would basically say we've already broken, and the price action through here actually does sort of match up more with this trend line, which has been subsequently broken. What is a bit more reliable, you could say, is that we had 3 weeks of consolidation and then last week we closed lower out of that consolidation period. So there was the coiled spring, there was the spring expanding, and it looks like we're going to continue to the downside. Now if we do get some sort of rebound here, it may only go as high as you know, the kind of the absolute bottom of the range, which is here. That's where we've got to so far, and we're attempting to kind of drop away from there. If we head a bit higher again, maybe it's these series of lows here, or maybe even as high as a 50% pullback of that drop up at 1292. So sort of, I believe this is about 1290. Yeah, 1290 is there. So 1290, 1292, if we get a decent rebound from this low, could be another place where the market rolls over if, in fact, we haven't found the place already. But to me, that weekly bearish engulfing pattern probably trumps any potential sort of trend line support coming in here. I mean, overall, I mean, we've failed at this resistance multiple times, and we're starting to take out support levels. So it looks like the resistance is held, and we're taking out support. The big test will be down here. You know, if we do take out this support, then it's a major support gone, and we could be headed much lower. For the time being, it's just a kind of bit of a pullback after failing at the highs. So the entire gold market doesn't have to be hugely weak, but it just looks kind of weak in the short term. My bias is probably to the downside here. Oh, I'm getting called out here for a call that last week I said FTSE 100 and gold were going to the upside. Yeah, I mean, you've got to go with where the trend was, right? My overall bias for gold is still that we eventually take out this 1350 and push big time to the top side. That's still what I'm kind of overall looking for. You know, if we do take out this 1350, it's been holding price up for so long. You know, you can really see some big momentum to the top side should this get taken out. But for the time being, we haven't. We're drifting lower. It's hard to know where this lower drift stops. All I can say right now is the momentum looks like it's to the downside. You know, we were consolidating for a couple of weeks. When there's a consolidation, you don't really know which way it's going to go. You can have your suspicions. But ultimately you have to wait for the break, and what I'm saying now is the break has happened to the downside. Obviously it could be a false break, nothing's a certainty, but it looks like the momentum's to the downside. As far as the FTSE, to be fair, I think I was calling for a lower pound, and I was saying that matches up with a higher FTSE, I think is what I was saying. Again, we were consolidating there. You know, I was looking at the currency weakness and predicting higher indices prices. Hopefully I caveated myself saying that maybe global weakness could drag the FTSE lower. If I didn't, I wish I had. Yeah, you're right. Yeah, Philip saying that gold's inversely trading to the dollar. I'd say that's generally true. There should be different factors that drive gold. Obviously, safe haven flows, an inflation hedge, etc., etc. You know, the direction of other commodities should also be driving gold. But it does seem to be the direction of the dollar that's just the main thing at the moment, and it's just because the dollar's been on a bit of a tear. So gold, I would say, has actually held up relatively well so far to this huge move in the dollar. Yes, it's obviously been kind of drifting low, but it hasn't been collapsing. So I would say on a relative basis versus the move in the dollar, gold actually looks okay. But anyway, that's another discussion. Yeah, so yes, Philip, I mean, yeah, I don't think gold is probably undervalued at this point, which you can argue means there's more room to drop until people find value, or you can say that there's some relative strength of gold relative to the dollar, and people aren't really necessarily selling gold because they don't believe in it. They're just, its value in dollars necessarily has to go down because it's denominated in dollars, and the value of the dollar is going up. So. I'll switch gears from the somewhat complicated debate on gold to oil. It's a bit more straightforward because we've also got the OPEC meeting, as I mentioned, on Friday. Price has been coming off after hitting that round number of $80 a barrel in Brent, and we've pulled back now to about 72, and we're rallying today somewhat, still in the context of kind of generally lower lows and lower highs. Just because, as I mentioned, maybe this output increase isn't going to be quite as much as people thought. This is one where I have these two moving averages on the chart, and sometimes they can be a bit deceptive because, judging by this 50-day moving average, it looks like price has obviously dropped down, and we're basically in a period of weakness. But that said, if you kind of zoom out here, we're still looking pretty strong in oil, right? I mean, look at this trend. I don't think anyone could call this daily trend in oil a downtrend, right? But we're obviously going through some sort of correction at the moment, if not a reversal. But my bias would probably be more towards it being a correction. But the way my moving averages kind of keep me out of trouble is, okay, so during this phase, obviously, we dropped through, for example, looking back in the past, we dropped through the 50-day moving average. As it turns out, pretty much come back down to that old, you come back down to the old support or thereabouts, or basically hold the support and then end up rallying again. Okay, so I didn't buy down at the support for me because I'm below the 50-day moving average. I'm kind of worried about the trends continuing to the downside. But if you do get this push higher, the drop, you make a higher low here, and then you have a high here, you break it to the top side, find support, and then you're up again. So, okay, so maybe up at this point, you're up above the moving averages, you wait for the dip, and then you're in alignment with the trend. So everyone has their different approach here. Maybe a 100-day or a 200-day average would have worked. For me, I try and keep in line with these 20 and 50. 20 for the faster trend, 50 for the slower trend. At the moment, I'm not interested in being a buyer in gold, in oil, just because it seems like the current momentum is weakness. We're taking out the lows, failing to take out highs. But obviously, should that change, we'll obviously be at higher prices at that point. But the trend will be in the direction of higher prices. At the moment, it's not. So can I predict what's going to happen at the OPEC meeting? Certainly not. But it does sort of make sense, the rumors we've heard today, where obviously there's different opinions. Just to give you a bit of a lowdown, the Saudis and the Russians probably want to increase output because they can afford to do so, and maybe for political reasons as well. They want to take on market share from the US. And the other smaller producers, with probably Iran being the biggest one, they want to keep these quotas in place just to kind of keep the supply down so that the oil price doesn't suddenly drop. I think probably the knee-jerk reaction, I would imagine, to any increase in output should be to the downside in the oil price. Just necessarily, it's more supply coming into the market. But, if they've still got some kind of quota, it's not like before when OPEC just completely abandoned the market and said, let market forces take hold. They've still got a quota in place. It's just a higher quota. So that, to me, probably puts a floor under gold somewhere. Probably, if we do continue lower, I wouldn't be surprised to see these old highs around 70 holding up. And this general uptrend in prices, which we saw in this chart here, still just about holding up. So keep using the wrong kind of line. this is our uptrend in oil, right? I think this is what keeps us interested to the top side. You know, you can see that 70, these old highs plus the trend line, it would actually be quite nice if we got a little drop down to there, because to me that would be a value area in the uptrend. Would obviously be below the moving averages. The short-term trend would be down when we're there, but if we get a rebound back above the averages, then we're back in business. So let's see how it pans out. You know, maybe they do something dramatic and the oil trend reverses to the downside. Well, that could also be good too. You know, we will become bears on the oil price, and there's quite a good up move to reverse some of. Okay, we've hit the half an hour mark, so I think I'm going to call it a day there. Thank you very much for attending, everyone. Hope that was useful, and good luck with trading for the rest of the week. Jasper signing out.